Hey YouTube, just wanted to add something. Actually, I'm going to put something in before the video. I was kind of going back over the video, looking at some stuff, and I realized I was sniffing so much that it was annoying me. So I apologize for that. I'm going to try to work on that. I have a little bit of congestion or something, but I noticed that in other videos too. So it might just be a nervous thing. I'm not a video producer type of guy. So yeah. Anyway, apologize for that. I'll work on that, and let's get to the good stuff. How's it going, YouTube? Um, NFP day today, end of the week. A lot of news. It was really a rough week between the holiday, the half day trading, all of that. Pretty rough, but I was happy to end the week green. I'll go over my Eval status real quick. This is week 4. So this is the week I just had. On track. So the daily goal was $790 per day in order to hit 30,000 profit in 38 trading days. So here's my 38 trading days, and here's where I'm at so far. So I added another 10 accounts last week, somewhere right in here. So I'm only counting the profit and loss on the 10 accounts, but since now it's 20 and they're all in one group trade, this is actually double. So this was a $7,000 day. This was almost an $11,000 day. This one was 9 something. So you get the idea. This is all 1 for 1 right up here. But as of I think one of these days right here, probably right here, it was 9. I'm on my 9th day of trading the full 20 accounts. So it was a good week. I had an opportunity to get in late on the NFP, but I think the best decision I can make sometimes is to just not push the button. I mean, I had hit, my daily goal plus some. I had a green week during a really rough time. And, you only have so much mental capital. So I'm going into the weekend fresh. I feel good. I didn't give anything back. Most of the trades I feel like are high probability, and I'm confident I probably could have won. But was it worth, for what? I mean, like I said, I'm on track for my goal. Having goals is important. Have a lost goal. If you lose so much, you're done. If you win so much, get out. I can live on this. I don't need to trade any more than this to, double or triple my yearly income at my job. So this is the pace I set that I think is reasonable. And part of trying to be disciplined is sticking to, all your rules, including the profit and loss. So anyway, good week. Looking forward to next week. Maybe I can close this thing out. If I just keep doing the same thing 7 days in a row, or if I hit a nice day, I might be able to wrap it up next week and get that funding. I'm excited about that. So in this video, I want to go over a couple things, kind of maybe a little different from what I've been doing. I'm going to go over sort of the process I've been using for these silver bullet trades. I did a lot of DMs and stuff asking me, what time frame I'm using, what I'm looking for as far as liquidity, things like that. And honestly, I'm pretty much just trading it straight like ICT teaches it. I'm also mixing in the DR, IDR, and getting great results with that too. But the people in the academy, they're pretty familiar with that already, and they have the previous videos that I've already made. So for those that are asking about this, and there's tons of videos on the silver bullet. But like I said, I get people asking about it, so I'm just going to go over my thought process on it and show you what's on my mind. So this is today's New York session, going into New York, and all I do is I mark external liquidity. So when I get ready to start taking a trade, I'm going to put a liquidity line kind of right at the bottom of Asia, London. Where is that? Yeah, right there, and another one up here. Okay, so I'm not interested in anything until one of these lines gets broke. There's opportunities in between, but for me, the easiest to spot and the highest probability, and the way to place a tight stop loss, because you're usually dealing with a swing here. You can get a major leg swing is the best place to put your stop. It's going to hold better than something right here or right here. If you can get down here or up here or up here, your odds go up. So I didn't take anything right here. I accidentally took a trade right here. I was actually in a trade right here, and I was just trying to catch this move up to take this liquidity. The DR Lens data said that max extension was at the end of the session, and I have a lot of success with just waiting and kind of observing. I didn't think it was going to dip down here and take sell side. I figured that would come out with NFP. So I was just waiting right here. I got in about right here somewhere. And my trade debate is the time is set for my local time. It won't allow you to put a different time frame in there like New York. So I'm looking at that clock and I'm seeing 7:30, and in my mind I know the session is ending. Let me find this picture real quick. You'll get a kick out of this. And I made a joke about it on Twitter, like it was a planned thing. So here I am, I'm in the trade, I'm waiting. You can see it says 7:30 a.m. right here. But I know I'm also waiting for the end of the session. I've been up since 2 o'clock and just, a little lethargic. So I get in right here, tight stop right down here, and all of a sudden it starts bouncing. Bop, 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 bop. I'm like, holy crap, what is that? And then it starts to go up, 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 up. And I just got out. I was like, at that moment, I was like, oh crap, NFP. So I got really lucky right here because it could have just as easily went the other way. And honestly, I think I was using a mental stop because I only had like 5 micros in it, so not a big deal. And usually, it doesn't move anywhere crazy like that. You definitely got to do that around news events, or, I'd say do it all the time. I'm stupid for not doing it, but on this occasion, it just seemed like a small trade, tight mental stop, and I wasn't really thinking about it. Had it jumped the other way, okay, this move was so fast that, I don't even want to think about it. But anyway, so I got lucky on that one, picked up a little bit of money. And then I also took one in here, and I just took it, part of the way. I believe I took one right here. So I waited for the initial, the NFP stuff, and then for me to take the trade, like I said, I need to see the external liquidity taken out. So I wasn't going to take this because I felt like this was still all of the volatility and what have you. But when it came down here, took out the liquidity and consolidated, then that was a signal. Actually, I took it here because I remember, I took it over here. But I didn't get the market structure shift here. So there's no market structure shift. Liquidity's been taken, fair value got created. And it would have won. If I would have got in, my stop loss would have been down here. It would have came back down, retraced, came back down, retraced again, and took off. But like I said, I really need to see the market structure shift, because right now you've got lower highs and higher lows, and the obvious thought is it's going down. So I wasn't confident taking that. So once this came up and I got this market structure shift right here, where these relative equal highs were broken, that's the fair value gap I got in on. So whether it was the upper one or the lower one, I don't remember, but price came down. My stop was right here. Like I said, I go under the swing low, that major leg that I'm in, and then I picked up, I don't know how many points, not that much. I think it was 3 or 4 points up to here. I saw my daily goal, and I was like, okay, again, trying to be disciplined, just looking for base hits and base hits. I'm trying to preserve the drawdown. That's my main concern. Once I get to a point where I'm not having to worry about that trailing drawdown, then I'm going to let it run. I'm going to go to break even, all of that. But if I let it run up here and it comes back, it goes against my psychology. It just makes it harder. It's more of a hit, I guess, to see the drawdown disappear. If you lose the trade, that's even worse because you lost the profit that you had, and then you go negative as well. So it's like a double hit. So on the evals, for all of you that have done it, how that works, how that affects you, and how you have to trade a little bit of a different plan. So anyway, that was good. And then I didn't do anything else the rest of the day. I missed my move up here. I had a limb fall in my yard, a big one, bounce off the house next to mine and come within inches of my own house. So we were out there dealing with that. And basically there was a couple opportunities to catch one here, either on the 1 minute or the 5 minute. This would have been a weak market structure shift right here. It really needed to take this swing. But I've found that when there's a good bit of displacement, And fair value gap, if you're up here, you know, and you can just risk what, not more than 5 points probably. Yeah, 4 something. If you can just risk a little bit, more times than not, that displacement is going to work. I mean, technically it took out swings, right? You can see them up here, but on a move this bullish, you want to see a major swing taken out. So this would kind of count, but this would be money right here. So again, here's your, you know, displacement, energetic candle, you know, valid market structure shift, fair value gap, and then the retest. Now I would have got in probably right, you know, immediately, and I would have had to have very little drawdown. This would have been a really low stress, easy, great trade for taking partials, all that. Now there was a lot of consolidation, but you know, most of it was in profit. So a couple times you went, you know, half a point, maybe something negative, a point at the most, and that's, I don't even think that hardly. Yeah, about a point. If I can get that every day, I'd take it. That's just an amazing, easy trade. So then you see what happens here. It just, you know, it came all the way down. It was a 30-something point move. And I want to highlight something real quick, because this video I'm going to be talking about the difference between retail trading and smart money trading. In a video I put out recently, I was talking about how this isn't random, how it's, you know, controlled by algorithms, macros, things like that. And it gets reinforced every day when I start looking at stuff like this. Price went all the way up. It reached some external liquidity from Thursday, right? Reached up here and got all of London here, and all the way up to, you know, right there. So all that liquidity was taken on the NFP move. Mission accomplished for the market makers, mission accomplished for the banks. So that's the whole accumulation, manipulation, distribution factor, which I also have that on here, Twitter. I want to show you that real quick. This is important. So this is classic pattern, you know, algorithmic delivery of price. You get the consolidation where orders are accumulating on both sides of the range. You got your trading range here. Everybody that's going long stops down here. Everybody that's going short stops down here. And it's over and over and over. Down here, same thing. Consolidation, orders, 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 everywhere. So this is a huge pool of liquidity. It's been building since, you know, 7:30 last night, all the way up till 8 o'clock this morning. So that's the accumulation phase. When you see this, you can start looking for a move. You can anticipate. You can start knowing that the banks are gearing up to take these orders and then move them up to a place where they can, you know, get premium prices for it. And you see that real clearly right here. This is the manipulation or the inducement. Takes out everybody's stops on both sides, right? Nobody's got stops down here this deep. Most nobody. I mean, if you're trading one micro, you might, but if you're trading contracts, you're, you know, a few ticks under, a few ticks above. So not only does this take out everybody back here, it induces people to get into the market and go either way over and over. And they do it. They guess, they think this is it, this is the move. And on a candle like this big green candle, a whole bunch of people started trend trading, and their moving average went crazy, and, you know, the RSI was jumping and MACD was crossing. All that stuff was happening right here that said buy. Well, that's by design, okay? Because look what happens. I mean, immediately price rips the other way and takes them all out. Everybody that went, you know, everybody that went long, they lost their money. There's people who can't pay their rent today because they tried to trade, you know, NFP open. So that's why I stay out of that. I know this is coming. And the closer it is to this part, the less likely, you know, your model is going to work. So if you wait a little bit, afternoon's, you know, optimum, but in the open somewhere, it's more of a normal flow. You get the big push up, the retrace, and then the move. But back to this. So you get the manipulation. So the banks, the hedge funds, and this is all stuff ICT says. He just says it in a longer video. So basically, they don't have shares. I mean, they want to buy 1 million shares, 1 million contracts, or thousands, hundreds of thousands, or whatever. They need me and you to be in the market, and they need us to sell them our shares. So what happens is when you get stopped out, you're selling your shares back to the market at a loss, okay? And they then buy them up way down here in the discount range. If you put a fib, you know, a 100%, graph up here, and you put it in half, for them, anything under that 50% of this range is discount. Anything above the 50% is premium. So they want to buy down here in discount, and then they manipulate the prices moved with a reason up here into this wonderful place where more stops are taken from the liquidity that was over here, like I mentioned, in London and everywhere in between. All those orders are getting sold at a loss. Well, they're making the money and they're buying them on the cheap as a result of that. So that's sort of the step-by-step how that works. So people got induced to go long here, they got stopped out. Guess what? Here it goes. Market's going the other way. Okay, this is my chance. I'm going to get in, right? Or the people that were even waiting for the top didn't even go long. They just assumed there'd be a retracement. So they jump in right here and they go short. Okay, now we're going all the way. You know, we're taking this puppy down. We didn't get in just to play games. And then immediately they get stopped out because this is a decent range of points right here. When you start talking about NFP in London, this is a little few ticks point stop loss. This is a 10-point stop loss. Not many people are risking 10 points. So they got to find a place in here where either they're on lower time frames and there's swings in here, or they're just getting above the fair value gap or something. But very few of them are going up, putting their stop all the way up here. Okay, that's why you get such a huge move. So now you got a bunch of people going short, and they get stopped out. And right about here, if you're you or me a year ago, we're doubling our position size and we're reversing again because this time we're going to get it right. It's not going to trick us again. So here we just lost a trade or two and we're mad. We're going to revenge trade this thing. We say, you know what, 2 contracts and stop loss way up here. Well, guess what? I mean, they get liquidated. I mean, that it doesn't hold up. So this is by design several times. It generates hundreds of thousands of orders. If you look at the volume, most of that being transacted is people losing their money right here to the banks, hedge funds, market makers, everybody that's pulling the strings. So eventually this smooths out and they have their orders, they have their shares. So there's this one big push back down. This would be sort of an order block if there was a fair value gap closer to it. But a lot of times the last down close candle in this situation is the order block. And it is something you can count on later, but for right now, it's just, here we go, we're going back up. So now we're moving up, and again, they want to take it up here. We're not really in premium yet. So as people are getting stopped out, orders are being consumed, they're selling at a loss, right? People that went short here, maybe, comes back up here to where they're break even or so, and they don't trust it, they think it's going to go back down, so they get out, they sell their orders. And this could be profit taking too. People that bought down here got lucky, caught this bottom, they're profit taking. But the whole thing is we know price is going up here at least to the minimum to tap this liquidity. This is liquidity from like a week prior. This liquidity down here was just from yesterday or the day before. But if you go to these lines up here, I can't. This is a picture, so I can't go over on the chart. But I drew them from areas of liquidity from previous sessions. So we know price is headed this way. And then they get up here, and now they are in a great position to sell what they bought down here, okay? And then they're up here. Well, what better time to short the market, right? They know where the market's going. They're about to push it that way. So then you get them shorting the market, and we see the result. So they're up here. Actually, I can't show you that liquidity. It's over here, right? So this is the lines, the blue lines that I had were from here. Well, price, went way up there and took that out. So up here, they're now shorting the market. Makes sense, right? I mean, if you could buy low and sell high, and then do the same thing in reverse up here, that's exactly what we would do. That's 100% efficiently taking advantage of what the market's giving you. So we get up here and they're generating more liquidity. Now again, some of this is profit taking. That's going to, it's in there, but it's not necessarily what's driving the price. The algorithm is driving the price, trying to induce people. It's all about inducing people to get in against the direction that the market's about to go. So these people have seen a couple pullbacks, big strong push, little pullback. This has got to be it, right? I'm going short right here. I'm betting the farm. All right. Well, you're working at Kroger now, I guess. No more farm because you get ripped. And I mean, there's nobody putting stops. This is 71. Well, 5 or 6 points, but this is hindsight. They didn't see that. All they saw was this. They think this is the top, so they're going to go, a couple ticks above just to be safe. Had they known this was coming, yeah, they might have put a big old 5-point stop loss, but none of us do that because if we lose, we don't want to lose but a little bit. So anyway, that's more generation of liquidity, fuels the market more, up, consolidation, getting people in. And then here we go. We're going down, and this was an opportunity for an entry on the minute, right? You got the big push, sort of a market structure shift, but this one was, I think, stronger. Either one would have worked. But that's the smart money model, is to wait until the bank shows their hand. We know this is all coming. You should anticipate all this. Usually you can anticipate a few more shots at the top, but for a fake, one more up, and then a big push down. So those are the kind of the models that repeat. That's because it's the most efficient ways for the banks to do this. Okay, they want to get liquidity, they want to sell high or buy low and sell high, and this is just they've had years to refine this process. This is what's working for them. This is what's going to keep working. So this would have been a silver bullet type entry. And I think it's actually in the time frame too, or maybe a little sooner. But that's another thing about the way I do this. I'll take this setup even if it's not in the window, that hour window, because when I see the setup, it plays out. I mean, I back tested it for quite a ways, and I didn't really have any. I recorded what the time was just so I could see. You know what? I got that too. Let me show you that. Might as well try to do this as efficiently as possible. Back test 1 minute silver bullet. So this is one of the back tests I did for about a month. Okay. Every opportunity that I saw in the London, the New York 1, and the New York 2 sessions, I recorded everything. The time, the candle that created the market structure shift or fair value gap, whether I won or whether there was no opportunity in that session. So what that means is it presented itself, but it was like a breakaway gap. It just didn't come back to retest the fair value gap. So the model presented, but it was neither a win nor a loss. I couldn't take the trade. So, or in this case, it didn't fit all the criteria. So I got right over here. There wasn't that much space. It was a tight range, and it wasn't in discount, so I wouldn't take that. And then the other none, there was a big news spike at 8:30, so I skipped that. It kind of threw price off. This one's the same thing, not discount. Fed share speech at 11, didn't have discount. So those are the rules I'm following. I'll fib the range, and I'm looking for longs and discount, shorts and premium. If I don't see that, then it's a no trade for me. And some of them still win, but you want to go with what your most probabilities are. So this one had a really tiny fair value gap, and I found that if they're one tick, sometimes they don't hold. 2 ticks and above seem to be pretty consistent, all the way up to like several points, and then it becomes a liquidity void, and you can expect it to be filled rather than respected. So the times, some of them are within the time range, some of them are not. So that's, I guess. If I see the A+ setup, we were talking about it the other day about, what's overtrading. And to me, overtrading is when you start either revenge trading or trying to make up losses or breaking your rules or something like that. High probability trading is when you see the model that you've back tested and you have statistics and you know the probabilities and you know what the risk. When that setup shows up, that's your best time to take a trade. It doesn't matter what you did that day. That's the trade you take, okay? If I'm 5R in the hole, and this trade, and it happened to me. It actually happened to me. I was deep in the hole. I don't know, a week or so ago. And it ended up being my best day because I took my, here I can show you, hold on. It was on this day right here. Okay, so I was back and forth until the last trade of the session. Had just gotten stopped out for a 4-point loss, but it was a good trade. So I re-entered and I added on the way up. Okay, that's the mentality that I have. I'm gonna take the ones that, this was 8 trades I took that day. I've got this color coded so that 1 trade is a good green, 2 is a good green, right? 2 trades a day, that's plenty. The way I'm doing this with these multiple accounts. 3 is okay. Well, you know, you did what you did. I start getting up into 4, 5s and over, and it's red. I don't want this many trades. But if I see that setup, I'm already $2 in the hole today. At this point, when I got stopped out for that 4-point loss, I was $2 in the hole. The last trade I made was crazy. I mean, it was like 12 points on 20 accounts. So that took me from in the hole to out because it was a good trade. So that's something you might just want to keep in mind. You know, there's a lot of people that discourage certain ways of trading and taking too many or whatever. But like I said, if you know what you're trying to see and you see it, and that's what you have the very most confidence in, you only get those so many times. So there's no reason not to take that trade. You checked off all the boxes already. There is no hesitation. There's no subjectivity. It's mechanical. Take the trade. That's my advice. But if it doesn't work for you, don't come back and come find me or anything. I'm just saying this is my approach. This is what I feel like is right and what's working. So price basically, you know, when it comes back down here, completely distributes both ways. You can say that this has been effectively and efficiently delivered buy side and sell side. All these gaps have been filled, all these inefficiencies taken care of, rebalanced. Liquidity that was created on the way up with all the people that are going long was then collected when it turned around and went down, because a lot of people were holding for who knows what. You know, guys that swing trade or whatever, they might have saw this move and think it was going up for 3 days, and so their stop loss is down here, you know, and they're using a lot of money, obviously. But you got to think like that. That's what the market's after. It's not just me and you. It's people who are thinking much bigger positions. There's banks and stuff that went in at midnight, and they're looking to see what they have in a week or two. Okay, so that's the bigger picture, I think, and that's what's important about sort of understanding the macro dynamics of the market as well as the micro, right? This is all kind of micro, but hedge funds and banks and what's going on with them and higher time frame analysis, we would say that that's kind of the macro environment. So, all right, so on the way back down, guess what? All this liquidity is being created, all these imbalances, all these inefficiencies are made. So guess what we'll be looking for next week, right? This repeats over and, just like ICT says, over and over every day. It'll never stop. Now, to different degrees, obviously, and today was a sort of a special day. It's going to start being a little place in my heart on that Friday of the month, because I'm seeing you can really do well on NFP as long as you avoid the meat grinder, right? Stay out of that. Wait for this. When it gets clean like this, shoot, man, you need 1 trade like that a week. All right, so efficiency of delivery. Price goes all the way up, comes all the way back down. Look where price came to. Everybody but the guy who had his stop loss 2 ticks below this only spot in the market pretty much got stopped out, okay? And sometimes it'll even stop just a little bit short because you'll have an order block here, and there's orders in that, you know, then catapults price. But there's no order block here, right? There's a couple small fair value gaps, they get tapped. No order block, so you can plan on price probably making that little extra extension all the way down to the area of the New York low. This is just, you know, something that repeats, that if you know it and you want to kind of figure out how far you're going to go down, if you have that in your mind, you know, the market's going to be efficient, the market's going to close, it's going to, you know, do all that stuff, then, you know, I think that'll help you. All right, so next I've got, I was talking with a buddy of mine, and he's starting to get into trading and stuff. I was trying to explain about retail versus smart money, and I had this opportunity to use an example of trading a trend line, you know, a wave type strategy, and it's worked out really good because I only had to go back to yesterday to find, you know, the typical fail, you know, and I was able to kind of explain to him that this is something the market uses to generate liquidity. It doesn't happen every time, because if anything happened every time, we would spot it and we would exploit it, okay? It's not that the market couldn't beat us every time. It's that the market doesn't want to beat us every time. If it beats us every time, we don't put our money in it. Everybody quits and goes home and talks about how shitty it is to try to trade the stock market. So it's like the casino. The casino will let you win. Their slot machines, if it's programmed to win 52 times out of 100, they're going to give you 48. And there's a lot of people going to make money on that. But if you sit there long enough, you're going to be one of the guys that pays that extra percent, okay? They don't mind you winning. It's good for business. They're making trillions of dollars on this stuff. So it's not beyond the realm of, a possibility that they're actually going to do stuff like this, just enough to when they want to, they need their orders, or this is one of those 52 times that you're going to get hit, and this is what's going to happen. And you're doing better at the casino with a slot machine than you are these types of trades in the market. I'll tell you that right now. These don't hit 50% of the time. And they're so hard to manage sometimes. It's just, anyway, here was a great example. So this is a trade that would have been looked at by people trading this strategy, retail-minded strategies, what you get mostly on YouTube, books, seminars, courses, everything. Got a nice trend line here. I mean, I used to be a trend line guy. I can draw a trend line. My little squigglies, not so much, but you understand the point. You're taught that price keeps bouncing off this line, and you're a breakout trader, right? So you're either going to wait for breakout or reversal. You're trying to go either this way or this way. But for this example, this would have been the breakout trade, and really both sides kind of get taken like this. So this isn't an accident. This isn't selling pressure. This is an inducement move. This is telling Joe, I'm a trader, to go short right here because all your signals are met, right? I'm pretty sure that whichever EMA they're using right here is dipping down a little bit. Everything says low, 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 short, and then you get this big pow. And you're triggered by the conditioning you've had of looking at this pattern over and over and over and seeing this break. They don't wait. I mean, I've done it. I didn't wait. When I saw the break, that was the model, and I got in, okay? And I swear on everything that I used to think the market was in my head, that it just somehow knew. Well, it does. You're programmed through all this media and all this, information to take that trade, okay? That's the retail trade. So here's what happens. Price comes down, right? The stop loss is going to be a couple ticks above the candle, right? That's standard. You're not going to put it way up here. Everybody's trying to keep as much money as they can. You got a better chance of winning if you're up here, but if you lose, it hurts your risk reward too much, so it's not worth it. So take the small loss and move on. Anyway, so he gets in and price starts going the other way. And they're like, dang, this isn't what was supposed to happen. Oh, it didn't get stopped out. That's great. Well, this is where there's people probably trying to maybe go break even or, getting out early because orders are getting sold. And then, there it is. It goes back up, hits the stop, keeps going, and that's just, that's what that is. I didn't have to go back. I went back to the 6. I went back yesterday. I just skimmed through the chart real quick, and I was like, bam, next session. I was like, oh, there's a loser. And I kind of explained that enough chart time, most of us that have spent time in the charts can just look back over a day or two and see failed trends. We see resistance get broken. We see support be disrespected. We see all that stuff natively because we're just in the chart so much. But this was a good exercise for me to be able to sort of show it to somebody that's just trying to get in and start to understand this stuff. Now, this is the best part of the video. Okay, this was really amazing. I was able to make my point that not only is this inefficient, but the smart money trade on this exact thing was exactly the opposite, okay? If I traded my model, okay, I was going long right here, and I was taking my profit over here, okay? I know that sounds hard to believe. How could he possibly know that? Well, because I went to a higher time frame, right? Higher time frame analysis. They don't really do that a lot in trend trading and waves and whatever. But lo and behold, here's the push down right here. I left the annotations here. I left it where that was and where the stop was. Okay, it doesn't take long to see what's happening here. We've got an inefficiency, an imbalance. So smart money traders, not only do we not trade anything like them, it's diametrically opposed. We will literally take the opposite trades. Well, guess what that does to all of us who are used to losing a lot more than we win when we were on that side? We were on the wrong side. That's all there is to it. This is a smart money trade compared to a retail trade. The retail trade is a blowout and happens by design to cause that issue. This is the algorithm working in the bank's favors, money markets, and telling them we're going to get a rejection out of here. We're going to push up. Okay? See the difference? So I'd much rather be the guy that's able to use this information and buy down here, easy trade, and sell up here. Now, it's not using a lot of, you've got to go down to the lower time frames to see your opportunities, but that's just what we would have looked for. We would have known this was coming. This is the first tap into what is it? I think this was a 15-minute time frame, pretty respectable time frame. So when I see this, and I've always got this open on my other chart, I'm like, okay, right about here, we're going to get a push. Probably won't go past the middle, which is the consequent encroachment. If it does, then that's an indicator it might push lower. But if it just comes in here and taps, that's a good sign that price is going the other way. And it happens so often. I take trades just on the bounce off of fair value gaps and order blocks, especially on higher time frames. I know it's good for a few points. I don't recommend doing that because there's times it's going to blow through your stop, and I don't want to be responsible for you saying, oh, this guy said this. For myself and my own trading and what I've seen in my back testing and in my live results, I have confidence that when I hit a 15-minute order block that's solid, hasn't really been hit yet, or fair value gap, I'm going to risk a very little bit. I'm going to let it push in here a little bit, and I see the middle. I'm going to take it before the middle and put my stop loss just below the middle, and that's how it's going to go. And that's the exact way I would do it. I wouldn't catch it right here because I'm expecting it to push, because there's another fair value gap on a lower time frame inside here that's a little bit smaller, like the 5-minute and the 10-minute. This might be on the tick for those. So I'm going to wait since I'm on a higher time frame. So when it gets close to the middle, I'll split the difference or whatever, find a good spot, and take the trade. That's like a third of the way, maybe, something like that. I got in right here and just risked a point, basically, from 63, 2 points, 63, okay? And then from 63 up to this fair value gap, guess where my target is? Look at that. Right where their stop is, because I'm getting out right when it hits this fair value gap. That's my first place. I'm not going to wait for it to do all this. If I've got, what is this? This is that. It's probably 69 points. So 6 point, there's your, your silver bullet. That's that. If we get 5, we're happy, right? That's what ICT says. 5 handles a day keeps the 9 to 5 job away. That's how it works. So I just think this is an amazing way to show, smart money and retail trading next to each other. So you need to understand the impact of what's going on. It's completely opposite, and you can use that to your advantage. And like I said, be on the side that's winning more than the losing. Because I know my win rate was nowhere near 65% when I was doing this, and I lost a lot of money as a result. Following trend lines, RSIs, MACDs. I don't use any of it anymore. If I have the DR range up on there, I draw my own little, liquidity lines, things like that. So that's about it. This is gone, 38 minutes? Yeah. So I hope you found that interesting, and y'all have a great day.